DynamX. I hope you're having a terrific Tuesday, and I wanted to give you guys a really quick video today and discuss the topic of taxes. Okay, I want to talk to you today about how you can reduce your taxes by up to 15% just with this one move, like one thing you do and it changes the entire deal for you. So most of us that are watching are either, you know, some sort of entrepreneur, business owner. You've got a side hustle. Maybe you're just a full-time like 1099 salesman, and you earn commissions, or you've got some sort of thing. You know what I mean? Like you're entrepreneurial with some of your income. Many of us aren't aware of the fact, and I wasn't when I first started in business, that when you are a self-employed person, you're an entrepreneur, you're a business owner, if you are profitable, any of that profit that you generate, you owe what's called self-employment tax. Okay, and here's what that looks like. So you have your income tax, federal and state, right? Now, in addition to that income tax on any of the profit that you have retained by the end of the year, you have an additional 15%, 1-5, Medicare, Medicaid, Social Security, all the things your employer would typically pay for. Since you don't have one, you pay for them yourself, right? And here's the downside with that is if you don't think about that and you don't plan on it, you will pay an extra 15% on your taxes right off the top. And if you don't have the money set aside, that's how a lot of, you know, realtors, insurance guys, you know, etc., end up owing money to the IRS, is they don't plan ahead for this. So how do you effectively reduce that? How do you prevent yourself from paying that 15%? I'm going to share that with you today, and I'm going to share with you how you can take that 15% and drop that into your sacred account, so you're actually avoiding double taxation. Okay, 2 times the fun. So the way that you avoid this is, initially, if you have an LLC at the end of the year, you would elect to file as an S Corp. By being an S Corp, you have 2 things that go on. Number 1 is you're going to pay yourself a minimal required salary. It's going to be based on, you know, the minimal averages for your industry. So you're going to pay yourself a salary. You will pay income tax on the salary. You will pay self-employment tax on the salary. But that's better than paying income taxes at the bottom of the normal range for your industry. Now, any profit that you have left over after that salary is retained by the S Corp, right? So you would pay, income tax on it via the S Corp. But as an owner, you can pay that to yourself as a bonus. You can pay that to yourself as a draw, as a dividend, or you could even drop it into a sacred account, loan against it, and then borrow from your company, and it wouldn't even be income at that point. It would just be, you know, a transfer of money. It would be like a loan, right? So the way that you're going to structure that is through an S Corp. You're going to initially need an S Corp, but as you start to get more advanced, let's say you've got more and more profit, that's when you would have what's called an S Corp management company. So it's a separate entity that might own your business or your LLC and manages it. It's structured as an S Corp. It has the same tax benefits, but it also gets rid of estimated quarterly taxes. So it's going to help you kind of keep more throughout the year rather than having to make those estimated payments. And that's also a benefit on just keeping more of your money sooner. Now, if you are able to do this, you reduce your net taxes by about 15% on that money without getting in trouble, right? So guys, that's a simple tool that I wanted. And you would like to get more information on this, I want to drop a link for you in the comments really quick. And that's going to give you actually a 5-point strategy to reduce your taxes. And it's going to give you a free call with my CPA for a consultation so that you can find out if there are ways to reduce your tax burden right now. On average, guys, we do handle taxes now. On average, we're able to save 20 to 30% on your taxes. Again, that's money that you're keeping, retaining, putting back into your sacred account, investing, rather than just giving it to the IRS so they can spend it on deficit spending, war. Make sure you check out that link in the comments. It's going to be jerryfetta.com/taxes. Thank you for watching. Like, share, and subscribe. I'll talk to you soon.